This is a question that's talking about cash payments. So we're still talking about budgeting, but we're going to be looking at how much our cash payments are. And it says the cash payments for Finch Company in the month of June are. So we're going to have to figure out how much are we writing checks for in the month of June. So I'm going to take for the month of June. Okay, I'm going to be focusing there. So of course, there we have June. Now, let's read the rest of the question. Finch Company began its operations on March 31st of the current year. Finch Company has the following projected costs. We have costs for April, May, and June. First, we have the manufacturing costs, $156,800, $195,200, and $217,600 respectively. Now you notice that there's a little number 1 here. So I'm going to go down and look at what it says in this footnote. 3/4 of the manufacturing costs are paid for in the month they are incurred, and 1/4 is paid in the following month. So what they're telling me is that of the June manufacturing costs, that $217,600 right here, only 3/4 will be paid in this month. 1/4 of May will be paid in this month. So we can see we're going to have a calculation to do there. Let's continue reading. Insurance expense, footnote number 2, $1,000, $1,000, $1,000. If we read the footnote for number 2, insurance expense is $1,000 a month. However, the insurance is paid 4 times yearly in the first month of the quarter, January, April, July, and October. Did we pay any in June? No, we didn't. So I'm just going to take a shortcut here, and I'm going to cross that out. I'm not worried about. Oh, hello. Don't want to do that. All right, there we go. I'm going to draw a line through because it's not relevant to me. Okay. Depreciation expense. How much depreciation expense do we write a check for each month? 0. None. Depreciation expense, as we remember from Accounting 1A, is where we're recording the how much of the fixed asset we've used up. We're recording the lack of usefulness of it. Okay, so we don't write a check. It's like with an automobile. We're driving miles. We're using the automobile up, but we're not writing any check for that depreciation, are we? Okay. So again, I'm going to draw a line through that because it doesn't require a cash payment. Property tax expense, that one is number 3, and it says property tax is paid once a year in November. Did we pay any in June? No. So I can again draw a line through that. It's not relevant to me. So I've taken some of these numbers and made them irrelevant because they are not actually requiring me to write a check this month. So all I have to do is take a look at this month's cash manufacturing costs and last month's manufacturing costs and make the calculation. So let's go ahead and do that. Let's change my color. We'll do red this time. So I'm going to take, for June, I'll take the $217,600. Again, I'm multiplying that times 3/4, or 0.75. Looks like $163,200. Now I'm going to look at the month of May. That's going to be this number, $195,200 times 1/4, or 0.25. That's $48,800. I need to add these two numbers together. So I'm going to take the $163,200 plus $48,800, and that's going to be equal to 0.002. Looks like $212,000.